Hello, everybody, and good evening, and welcome to another episode of Business Spotlight by Euron Systems, where we bring you inspiring founders, educators, creators, trainers who are transforming learning and businesses. I am your host, Mir Hyder, and today is a special occasion because we are not only having a conversation with an industry expert, but we are also officially launching a brand new learning academy, VLearn Hub. So at Euron Systems, our mission is simple to empower educators, trainers, experts to build, launch, and scale their online academies with technology. And today's guest is someone who truly embodies that vision. So please join and welcome me, Mr. Pradeep Muthappa, who is the founder of VLearn Hub. So let me just add you. Yes, sir. Thank you so much, sir, for first accepting our invite in terms of coming to the live podcast. Plus, also thank you for being a part of the Euron's vision. So,
Yeah,
over to you, if you could give a little bit understanding about what exactly you do.
sure. First of all, thank you, Mir, and good evening to all the viewers. So, my name is Pradeep. So, basically, I have 20 plus years of experience in the L&D domain. I worked for several IT companies and created a lot of training materials, e-learning training materials for multinational companies. And at the same time, I also have more than 20 plus years of experience in trading and investing. All forms of trading and investing, equity, F&O, even I've tried cryptocurrency and forex and all those things. So in the last 3 years, I've not been working for any company on their payrolls. So I'm doing freelancing work and full time into trading and investing, and part time into training. So as of now, I've taken training a step ahead by creating a full fledged self paced course and also live courses which I'll be giving as a virtual ILT online courses. And also, if you are in my location, then I would give one-on-one classroom training, face-to-face classroom trainings. So that's about me, and let me talk more about the training offerings that I have. So basically, so in my training programs, I solve the problems that investors and traders face. Okay, so most of the investors and traders have a lot of questions basically, but I'll take some of the simple questions but powerful questions. Something like what to buy. So if you are a trader or an investor, investor can be a short-term investor or a long-term investor. So, but the question what to buy is paramount. And similarly, how much to buy and how long to hold. Okay. So the answers to these questions are in my training programs. So I begin my training giving you a very high level overview of the macroeconomic conditions of the country. Okay, so macroeconomic analysis includes understanding of the economic cycles. There are four cycles. I'll not go in depth, but I'll give you a top level overview. So basically, there are four cycles. So the cycle starts with the recovery, then it moves on to expansion, then there will be a slowdown, which will be followed by recession. Recession, you won't see it often. Once in a decade, you will see recessions. For example, in 2008, there was a recession. 2020 COVID also induced a recession. So these are the cycles, and certain sectors perform in certain phases of the cycles. Okay, so that's a very high level about cycles. And then when you think about macroeconomy, the first thing that comes to our mind is GDP, right? So there are two types of GDP. One is the real GDP growth, which generally we talk about. Then there is something called nominal GDP. The stock market actually looks at nominal GDP. So what is nominal GDP? So real GDP is the changes in the number of products produced. Okay, and if you add inflation to that, inflation is changes in price. If you add inflation to your real GDP, then it becomes nominal GDP. For example, if we have a real GDP growth of 7% annualized, and if the inflation is 4%, your nominal GDP is 11%. So 11% growth is pretty good for the stock market. So stock market will perform, which means the earnings of the corporate earnings would grow in future, and which is obviously good for stock prices. So this is about high level about macroeconomics. Then we go into the sectors. So there are various portals which give you a high level perspective, performance of sectors, uh, starting from weekly performance, quarterly performance, half yearly performance, yearly, up to 5 years. So looking at the performance of sectors, you can see which are the leading sectors. So that solves uh, 50% of your problem. So if you know which sector is leading, which sectors have tailwinds based on macroeconomic performance, based on government policies, then you solved half your problem. Once you know about the sector, you can identify few stocks in that sector. And my next part of the training actually deals with financial analysis, which helps you pick the right stock in the right leading sector. Okay, so the financial analysis, I'll again give some examples and give high level overview of that. So when you say financial analysis, there are three statements that comes to our mind. The first one is profit and loss account, profit and loss statement, which is also called as income statement. Then you have the balance sheet. Then you have cash flow statement. So out of the three statements, you can check the health of a company, and this is fundamental analysis. Okay, so there is another part which is called technical analysis. I basically have used technical analysis a lot. I won't say that technical analysis is better than fundamental analysis. Both are complementary to each other. For example, let's say technical analysis helps you to pick the stock. Now you want to quickly check if the stock is healthy, if the performance is good, if the earnings is good. So there are a lot of problems that we face in accounting, right? So there is something called accrual method of accounting, where as soon as the sales is done, the sales figures are shown in the profit and loss statement, but the sales would have been done not on cash and carry basis. It would be on a credit basis. So the realization would come. There would be a delay in realizations. Okay. So how do we check all these things? So if you are able to read the balance sheet, you will find out the sales is good, but the realization is not good, which is called as receivables. Okay, so that is one point. And then you can also check the margins. So how good is the margins? So there are several margins like gross product margin, operating margin, OPM, or the net profit margin, gross profit margin. Sorry. So these margins also give you a fair idea where your companies, what is the demand the products have, and what are the services have in the market. So this will give you a picture of the profit and loss account. Then coming to the balance sheet, you can see a lot of things which are hidden from the profit and loss account. I will not pick up any particular stocks. So recently there was a stock which was showing huge inflated sales. Okay, whereas the operating profit margin was zero for several years, not 1 or 2 quarters, but for several years. And it was showing a small net profit. Okay, so for common retail investors, when we see growth in profit and sales, we see that we conclude that the company is doing very well. But there were a lot of hidden things, like the operating margin was zero, the return on capital invested or the return on equity was pathetic. So when you see the entire picture of various ratio analysis, you will get an idea of whether the company's performance is good or not. So there are a lot of other things which I cannot talk about here. I'll talk about another interesting thing on valuation. So especially whenever an investor buys, the first thing that comes to our mind is like whether the price is reasonably fair. Are you paying the fair price, or is the price expensive? For this, there is a ratio called price to earnings ratio, PE ratio. Okay, so let me go out of the stock market and give you an example or an analogy where the pricing, I can convey the fair pricing. Let's say, suppose you buy real estate. You are planning to buy a commercial real estate property, say for 2.4 crores. For the sake of simplicity, I'll just say 2.4 crores is the price. And your annual earnings on that property is, let's say it's 6 lakhs. You are earning a rental yield of 6 lakhs per annum. whereas you're paid 2.4 crores. So the benchmark, how many times the earnings can you pay to that property? So the benchmark is 10 times, which is nothing but a PE, price to earnings of 10 times. So that's the benchmark. Whereas you have a rental yield of 6 lakhs. 10 times of 6 lakhs is 60 lakhs, but whereas you are paid 2.4 crores. So am I missing something here? I am missing something because I have not factored the growth in the rentals. So the current rental is 6 lakhs, but there would be a growth. Let's say the growth is 20%. Every year, the rentals grow by 20%. The real estate grows by 20%. Okay. So this is measured by another metrics called PEG ratio, price to earnings growth ratio. So which is P upon growth. If the P is 20, let's say we are paid 2.4 crores. What is the P? So the P here is 40. We have paid 40 times the earnings. 2.4 crores is 40 times 6 lakhs. Okay, 40 times. The P is 40. So 40 upon your PEG ratio, growth, sorry, 40 upon growth, 20% is 2 times. So the PEG ratio is 2 times. So up to 2 times PEG ratio is reasonably good if you are in a growing market, if you are in an expanding market. So it could be a fair value. Even though you're paid 40 times the earnings, 40 times earning means your whatever you paid will be recovered after 40 years if the growth is constant. If there is no growth, let's assume for the next 40 years you are getting only 6 lakhs per annum. So you take 40 years to recover the money that you pay. But we are missing a big thing which is called growth. So every year, if real estate grows by 20 or approximately 20, sometimes 40, then it makes sense. Even 40 times earnings also makes sense. Now you come and apply to the stocks. You generally look at the P ratios of several companies. It ranges from 1 or 2 PE to say 1000 PE. Look at the PE for Zomato or Eternal, which is called Eternal, right? The PE is 775. Look at the growth. This year's annual growth is 175%. It's growing approximately 200%, 2 times the earnings. So that is a growth. You have to factor in growth. So these are some of the techniques in which you evaluate. So there are other valuation metrics like DCF valuation, which you can apply for IT companies or FMCG companies, which have a lot of cash flows. Then for banks, it's different metrics altogether. You don't apply P ratio. For banks, it's price to book ratio. Okay. There are a lot of techniques in evaluating. There are a lot of techniques in analyzing if the earnings quality is good. Okay. And also looking at the balance sheet, how healthy is the balance sheet? If they are hiding something from the profit and loss account, it can be caught in the balance sheet. Or if you miss something in balance sheet, you can easily catch it in cash flow account, cash flow statement. Okay. And then match cash flow statement with the ratio, working capital ratio, working capital days and cash conversion days. So you can align everything. So whatever people miss in the big picture, you can catch it if you are able to read all the statements. So this is where my training helps the investors to read these financial statements. Okay. So this is complementary to technical analysis. So even let's say you follow technical analysis, you follow support resistance, you follow the price action methods, and you get a lot of triggers, buy signals, and after that you can do a quick check, fundamental check using. I have created an Excel sheet where you can upload that sheet to a screener, and on a click of the button you get a scoring for that particular stock on financial parameters. Quickly check and then you can make a decision. So my training actually helps. My training and the tools that I've built actually helps you make decisions, buying decisions quickly. There is one more thing which is very, very important. So there's a saying called timing the market. You should avoid timing the market, but the time in the market is very important. Okay, I guess, yeah. So I guess you are getting the point. So there is recently the government made an announcement of the success ratio of traders. It is 98% of the traders lose money. If you say 92% lose money and 8% traders make money, out of 8%, almost 6 to 7% only break even. They don't make big money. Why do you go to stock market? It is to make big money, right? Whereas only 2%, 1 or 2% actually make big money in trading. Whereas investing is a different ball altogether. If you are able to understand the market dynamics, the economic cycles, then if you are able to read the financial statements of the company, and if you are in the right sector, the sectors which have tailwinds, then if you put your money and hold on to the stock for long duration, definitely you can create wealth. Okay, so that is a value I'm giving in my training programs. Okay, in addition to this training program, I also have another two more products. One is, as I said, the Excel sheet, and the one more thing is that I have also created an Android app which actually picks up the momentum in stocks. It is called as price volume spikes. So recently I've created this app, and if anybody is interested, I can share this app with you. So this basically it's a simple app which actually picks up huge spikes in volume or price, which actually picks up the momentum in the stock. That helps you to pick the stock as a first step. So this is briefly about me and my training, programs. So yeah.
Understood. So, actually, sir, I had a couple of questions. You can tell. So, let's say if I am an investor which falls under that 98%, let's say trader, okay, who doesn't make money, and I do not understand things much in terms of stock market and how the analysis and everything go. So, can a beginner be a part of your course, or it has to be a little bit person from the background? He has to understand things only then, or can a newbie also come into picture?
Yeah, that's a very good question. So it is meant for beginners and intermediate level, investors. Why beginner? So I don't intend to make the trainees as professionals after my training. So that is an impossible. The training work can only give you a perspective and give a right direction. Okay, becoming a professional analyst or a researcher or an investor takes a lot of years of hard work, personal experience. Okay, so as a beginner investor, you should at least be able to understand what the financial analysts are talking to you. So if you go to a financial advisor, so they would talk a lot of jargons. So they would say, okay, there's a the margin is speaking now. See, I'll give an example. You see that the profit, the sales is growing. You see tremendous growth, 80% to 100% growth in sales. Okay, and the earnings is also growing. Net profit also is growing. Everything is everything. The balance sheet is good. The cash flow is good. Working capital also is good. Everything is good. But the analyst says don't buy because the margin it's in a peak margin. Okay. So what is peak margin? So peak margin is, so there is something called operating margin. It's also called as EBITDA. So there are a lot of jargons like this, sometimes people call it as EBITDA. Okay, earnings before interest, tax, amortization, depreciation. It's also called as operating profit margin. Okay, then there is gross profit margin. Then there is net profit margin. Now, when you say the EBITDA is peaking, okay, that means there is growth. The company is growing tremendously. Everything is good, but it is given the highest margin, and the analysis expecting the margin to go down going forward. That is where he's saying it is peak margin, don't buy. So now, if you understand what is peak margin, then you will be convinced to listen to what your financial analysis telling to you, and you can make your decisions. The final decision has to be made by you, right? Buying or selling a stock, or managing your portfolio. Even though you go to a financial analyst, you take his advice, and then finally you make a decision. To make a decision, you should be able to understand at least the jargons they use, financial jargons they use, right? So that way, it will take you from a beginner to at least to some level where you have a reasonably good understanding of the financial statements, the jargons used, the commentaries by the anchors, CNBC TV anchors or NDTV profit anchors. Even they give a lot of good advice sometimes. They also dump stocks on retailers whenever they want, whenever they see a slowdown coming in. Okay, so the institutional investors are the first to see the slowdown coming in. Okay, because they have that capability. So before that comes in, they will have a lot of strategies to dump the stocks, because they need, whenever they say they do a big sales, they need buyers, right? If they don't have
Right.
buyers, the prices come down. It's an auction market, right? So they need a lot of buyers. So uh, give a lot of triggers to the retail buyers. So when they give triggers to the retail buyers, if you are able to go in at a higher level, if you are able to read the financial statements, then you are at a good steady.
Got it.
That's how
Understood.
it helps even the senior level investors.
Right. So, and I wanted to understand one thing from a 20-year different background. What actually inspired you to say, let me do this full time? Let me teach this full time. Was it purely that you were making good enough money? You're like, Acha, theek hai, it's time to relax. Let me make more money. Or was it there was some other goal specifically for getting into the teaching part of it? Because if you're doing trading and stuff, and if it is sufficient for you, still it takes a lot of efforts for people to go ahead and teach, because teaching is not that easy. So how
Correct.
did you come up to this decision that let me teach this to my, you know, students and
Yeah.
stuff?
Yeah. To answer this question, I have to talk about my background. So I started as uh, in the education technology sector way back in 2002. So my first company was a finance e-learning company called KSD Systems in Bangalore. So we were creating e-learning courses on various financial subjects. Okay, so that's where I was introduced to options, asset securitization. So if you remember, the 2008 financial crisis was because of mortgage-backed securities, the problems in mortgage-backed securities. So that is called as asset securitization. It is nothing but, in a plain language, it's leveraging your investments multiple times. So I got introduced to all these financial concepts in my first company. Then I shifted to IT companies. I was into training departments of IT companies and things like that. But I worked for one more financial company, Ernst and Young, where I was introduced to a lot of auditing content. So as an instructional designer, we should be ready to take any sort of content and create learning materials by bringing in a lot of learning theories and techniques. Okay, so that I am from the education background, and because I was introduced to a lot of interesting concepts, financial concepts in my first job, so I had a very keen interest in stock market. So though I was working in between, I used to do a lot of short-term investing and trading and all those things. So my first experience was in 2002 or three. I don't remember. So that was a period in which, after the dot-com burst, so there was a recovery. Okay. So unknowingly, I put my money in a company called SAIL, SAIL, PSU. It's a cyclical stock, purely cyclical stock into steel.
Okay.
I still remember I bought at a price of 16. I don't know. I didn't know anything about fundamental analysis, technical analysis, nothing. I just used to follow a web portal called moneycontrol.com. So look at the commentaries, news items, and message boards, and I got an idea. I bought sale. To my surprise, from in just 1 week, from 16 rupees, it went to 62 rupees in 4 or 5 days. I was a bit surprised. How is that possible? Like, just in 1 week, it went so much. Uh, then I went and asked the relationship manager. He said, "Okay, so the industry is changing. The cycle is changing from recession to recovery, and in recovery, the steel sector, which is called as capital goods sector, banks, capital goods. These are the first to recover. So
Okay.
their prices will be re-rated. So I was lucky to get into that. So that was my first experience. And then 2006 was a boom. 2006 and 7, it was a boom period. I could grow my small capital multiple times, because at that time that was a exuberant bull market. You put money into any stocks, that would give you super duper returns. Anybody could make money. But after the recession of 2008, the market actually changed. It became very difficult. So how much ever hard work you put, the market was very, very difficult. In fact, in whatever money I made, I lost completely and much more than that in 2008. That is where I was motivated to get into technical analysis. I learned technical analysis. I tried everything possible. And then I shifted to futures and options, burned more money there. Then I shifted to okay, options is very, very fast. And you, if you're an option buyer, then you burn money very quickly. It's like it's definitely if you don't know how to hedge your options, what are the if you don't know how to implement the option strategies, definitely you will lose whatever money you take to the market very quickly. So it's very risky. And there are, but it does not mean it's completely risky if you are aware, if you know how to hedge your positions, how to take advantages of volatility moments, and all those things. Then you can also make money in options. In fact, options selling, which my favorite option strategy is credit spread, short credit spread, which is a decent, which gives you reasonably good money, small money, and your risk is limited, and your reward also is limited. So I had various ups and downs throughout my career, and after COVID, also I was not completely into fundamental analysis. So, but still, just with a technical analysis background, I just bought a few companies and also sold. I didn't hold on to that. I regret much later. For example, Bajaj Finance was trading at 1800 at the low of the COVID, which went on to 8,000, 9,000 in just a matter of 2 years. Okay, similarly, Tata Motors, it came down until 80 bucks. It went all the way to 1,000 plus in few years, 2 or 3 years. I missed all those things. Then I, even in 2023, 24, certain sectors which had a lot of, backing like by the government, like the defense sector, the power sector, a lot of stocks gave multi-baggers. Okay, looking at all these things, I said, okay, trading is one thing. Okay, it is, you cannot create wealth in trading. You can create some small money in trading, but wealth is always created by investing in a good stock, good sector, the right stock, right sector for a longer duration. So that is where I put all my effort in subscribing to a training program from a daily based, in 2024. I spent almost 1 year to completely properly learn fundamental analysis. So, and then I also started practicing that. So as of now, I'm taking one step forward by offering training programs. So that is my background. So why training? One thing is my interest in investing and my experience in investing. The other important thing is I am from a training background, not from a classroom training background, but for training development background. So where we know how to create training materials like outcome-based training materials, which actually makes a difference to the return on investment, not just for the sake of training, but the training program has to make a difference to the return on investment for the customer. Okay, so there are a lot of ways, lot of techniques, learning theories, which you can apply to make your training programs effective, and the learning experience also is effective. Even if it is self-paced programs or face-to-face programs, you can bring in those effectiveness in the training programs. So, so everything is based on my 2 decades of experience. Hope
Amazing.
that answers your question.
Yes, yes. And I really love the fact that you are telling that there were ups and downs, and there were learnings, there were losses, there were profits, there were opportunities missed. Generally, because in today's world, we only see too many goods, right? Especially the social media, or the influencers, or I'm not targeting anybody, but generally there are people who come and brag certain things and show only the shiny side of things, or there are people very extreme. No, you'll only
Yes.
lose money. You cannot
Yeah.
do anything with this. So there are things which happen in the market. So, but I really appreciate when the things are coming up and the truth is there, that yes, it is possible to make money. Yes, if you will burn money, and yes, you will make a little set of money in trading. Yes, you will make a little bit more in terms of the long term investments and everything. So all of these things, especially for younger generations and the ones who are getting into the market. There's a lot of advertisements, there are a lot of promotional stuff happening in the market as well, right, from different companies, the broker companies, or the other people coming out. So that gives a little bit of good sense that there is somebody giving us the reality as well, apart from just telling that what is good and what is not working. So now let me just give a little bit of understanding on how the portal looks, okay, and where you can guys go ahead and subscribe to sir's respective courses, and how you can take it ahead and take the benefits of this respective program. So allow me to share my screen and launch of the VLearn Academy, VLearn Hub. I believe my screen is visible.
Yes, I can see your screen.
Great. So here we see master your skills with VLearn Hub, and there is a little bit of a picture. I mean, here we have, there are self-paced courses, plus there are live courses, as sir mentioned. In your self-paced courses, there is forecasting, stock market, using macroeconomics and everything, which sir gave in the very first understanding. And wow, because there is a launch period, sir has kept 70% off as well for it. So grab the opportunity, guys, and go ahead with it. So here you could see what you're going to learn, the description, what are the FAQs and everything. So complete understandings is there, right? In terms of the self-paced courses, basically self-paced course is you take it at your own pace, the content is recorded, and you can go ahead from there. And then apart from that, we also have live sessions where you have your techno, funda analysis of stock market. Guys, this is something which is in depth, and you have the access for 365 days, and it is starting on 10th of July. Right, we have the live sessions going ahead, starting from 6th of July, and then 10th of July also there are classes. So it's an introduction, and then there are different lectures which are there. You can see on how things look like. So guys, grab it before you lose it. So definitely we can look forward for these. And then you see, apart from that, there is another live which we have, and in that as well we go ahead with the option selling aspect as well. So in the option selling as well, there are different things which are going to start, and it's starting on 15th of July. Right, the live sessions where sir will be able to give you what he has learned and how he has been able to do, and what the systems he has developed. As well as that, there are certain product hubs which sir has told about the digital products, which is very much focused on how the Excel spreadsheet would work, how the PV Sky Spike Android app which sir was talking about, how does that work, and how you can analyze stocks using AI. We are also into AI, helping educators launch faster. So everywhere, how you will be able to get the help, you can go ahead and check out over here. And I've already put the link in the description. Plus, I'll be putting it over here in the chat for the reference, so that you can go ahead and subscribe, purchase, and take the benefits of what sir is doing. Options are there, guys, both recorded plus live. You can go ahead and utilize all of these from your end. So here we go. Yes, sir.
Great.
So this brings to a little bit end of our podcast. The live business spotlight, where we would wanted to understand about what Pradeep sir does, and the launching of his academy from RN. So definitely we would wish you all the best, sir. And definitely don't worry, there is a team which will be helping you furthermore, and will be helping you out to do something better.
Thanks, Mr. Mir. It was great talking to you, wonderful talking to you, and I am really glad to be part of this podcast. And also, thanks to all the viewers.
Thank you. Thank you, everybody. So, this is the episode with Mr. Pradeep Muthappa, the founder with VLearn Hub. So, at Euron Systems, we believe every expert has knowledge that deserves to reach the world. So, that's why we have been building this AI powered platform which helps the educators. We're just not an LMS, guys. We are more than the LMS. We are helping you in terms of your success. You saw there was a previous one with Dr. Nikhil Baljacob. Today, we have Pradeep Muthappa sir, who is in the live and who is being able to talk about what his journey is and how we take it ahead. So if you are a person who wants to get into the scene, educate, learn, train, Euron Systems is the way. So till then, everybody who is watching, and if you want to learn something from an expert for the past 2 years of experience, 2 decades in the real market experience, you can go ahead and visit VLearn Hub. So this is Business Spotlight by Euron Systems. I'm Mir Hyder. We'll be back with another inspiring founder story and a launch as well, definitely in the soon. So until then, keep learning, keep growing, and keep building. Good night, everybody. Thank you so much. Thank you so much, sir, for joining in. Thank you all.
Thank you.